Politics drives economics, which in turn drives the markets. In a world where Europe can't hammer out a solution even when faced with imminent disintegration, is it reasonable to expect anything better in India? 35 states, 217 spoken languages, 52 recognized political parties, 1.2 billion people, of which 37% are in poverty, and a vibrant and intrusive media. No, it's not easy to run this bus if it has to stop at every intersection to ask the passengers which way to turn. So when the market cheered the announcement following Prime Minister's initiative on infrastructure last week, 3 new airports, 9,500 kilometers of roads, massive hike in power generation capacity, and reintroduction of pension bill, I wasn't sure if it was for real. Already, Didi has once again vetoed the pension bill. Fraport country head has announced winding up of their Indian operations. A new investigation has opened up into Coalgate, which has brought work in coal ministry to a standstill. FIIs inexplicably found this to be the right time to wake up and invest $800 million towards the end of last week. Globally, equities staged a recovery in the hope of fresh stimulus. Nifty consequently advanced from 4850 to 5040 through the week. The question is, will it hold? Or better, advance further from here? By some accounts, the corporate universe produced an improved performance in Q4, but with muted revenue growth. Meanwhile, crude oil has fallen further. Brent has eased by 10% to $98. Yashwant Sinha made hopeful noises last week about supporting rollout of GST. In Bangalore, in the recent global investors meet, typical Indian charade was played out when MOUs were signed totaling 7.6 trillion rupees. Is this enough to get investors to board the bus again? A day after the PM promised 3 greenfield airports, the Indian MD of Fraport, in uncharacteristically scathing remarks, expressed doubts on whether anything will happen in the lifetime of this government. As a result, he said Fraport has decided to focus on other emerging markets like Brazil, Turkey, Vietnam and China. Evidently, there is a trust deficit, and like fiscal deficit, it's growing by the day. In Europe, Spain has finally wilted and has sought a bailout of 100 billion euros to shore up its weak banking sector ahead of the Greek poll on 17. China's inflation has fallen sharply to 3%, adding to the concern that more stimulus will be needed to prop up growth. Their worry lines are increasing as a raft of economic indicators for May, growth in industrial production, retail sales, and fixed asset investment showed marked weakness. If that was not enough, retail sales in US appear to be stalling due to structural unemployment and stagnant wage growth. Bereft of strong fundamental clues, Percentage Play tried looking at the technicals. While the positive divergence in momentum indicators did play out over the past 2 weeks, despite the disappointment over falling growth, question remains whether there will be follow-up support to herald a trend reversal of some promise. The long-term charts are yet to suggest a CDS up move, while Nifty faces a resistance zone between 50-50 and 51-50, where it will encounter the 50 and 200-day moving averages. Additionally, it has to break out of the short-term downtrend line running from February top of around 50-50. So the battle lines are drawn. Percentage Play will prefer to wait and see whether the bulls can win the day. Last week wasn't the best for quantitative pair fund, as our 2 existing positions moved against us, thereby eroding our return marginally. We are close to entry signals in a few pairs, which we hope will materialize next week. Meanwhile, we hope that over the next couple of weeks, the current holding will move in our favor. Nifty having moved 4% during the week, our outperformance has narrowed somewhat to say. In competitive value fund, we followed up on our strategy of reducing exposure and to be more in cash last week. We sold IDBI and presently hold 30% in cash. Should the market decline next week, we might offload some of the other swing positions ahead of the big events beginning 17 June. Remember, crucial Greek elections are on 17, RBI policy on 18, and Fed policy meet on 19. Also, majority of our proprietary trading systems are coming up with sells. If, however, the market defies gravity with any conviction, we could review this strategy midweek and move in with new positions.